Good morning, traders. It is 8:02 a.m. Chicago time on Wednesday, the 12th of July, 2023. Thanks for joining us on episode number 2500 today. You would think I would do something special, maybe wear a clown suit or do the show uh, uh, with a upside down on a handstand or some such thing. But I'm not that cool, and I'm not a youngin, so I can't. I can, but I won't do those things. Thanks for joining me, and for those of you who've been here since episode one, about 10 years ago, really appreciate the follow and the fact that you've been here all along. And I hope that the objective of when I started these has hit, because I know a lot of people come and a lot of people go. And I'm hoping that the people that go, uh, at least a majority of those, are going because they don't need my help or they don't need me to explain my view on the market because they've taken this information and have actually applied it and are profiting from it, hopefully. So this is, again, episode 2500 that represents almost 10 years of shows. There are 252 days, trading days in a year, and we're pushing forward. No, I'm not doing anything special about this. I'm sure the marketing folks here are probably not happy about that, but we're moving along. Here's the pre-market summary sheet. Oh, I forgot to tell you, derivatives trading is not suitable for all investors. In case you didn't hear that before from me, you're hearing it now. But here's the conversion trading pre-market summary sheet. And this morning we had the big CPI come across, and the numbers really came in quite quite a bit below what was expected. Let's take a look here. CPI came in at 3% versus 3.1%. The inflation month on month is 0.2 versus 0.3. But what's important here, the inflation numbers, it's better by 10 basis points. But what's really important is that core inflation has dropped 20 basis points versus the estimate, and it has dropped 50 basis points versus prior. We had 5.3 prior core inflation year on year, and today we have 4.8 reported for June, and the core inflation rate month on month came in at 0.2 versus 0.3, but that's 0.2 versus 0.4 prior. So what we have here is an acceleration in disinflation, and that's really, really a boost in the short run. It's a boost for earnings, but in general, this is not good for sales. So the market's kind of euphoric about this, and it's pushing higher. But again, if you listen to the macro guys, and there are many of them now, you'll find that the pricing of lower yields out into later this year and the cool off in CPI and so on can have some pretty negative effects on earnings. And we'll start, so with CPI out of the picture, now we're clear for tomorrow, and there's a ton. If you look at the pre-market summary sheet here, let me get a different color from my whiteboard. If you look at this thing, you'll see that it's really a very busy, calendar today, and it's it's got a lot going on here. ECB speakers, Fed speakers, and so on and so forth. And we have the Bank of Canada decision and so on. But for today, this is the big one. And then tomorrow, we don't have very much. We do have PPI coming out, not as important. The PPI in the prior month was negative 0.3. So PPI is not all that significant. But what's important is that Friday we do get Michigan sentiment. That's a pretty important one. But we also get the start of the bigger and more important players in the earnings season, with the banks releasing on Friday morning, and it kicks off the earnings cycle for us this Friday. So that's what's on deck next, and the market's going to pay very particular attention to earnings because the market's anticipating some cooling in the economy. So again, a whole bunch of central bank speakers today. It's just the calendar's a mess. Look at it. We've never really put it in two columns before. The person who put this together probably painstakingly organized this in a great way here, but there's a lot going on today. So a news feed is important today. Not that you're going to trade the news, but you need to be aware of what's coming, what was said, and the impact of it. I wouldn't recommend trading the news. Overnight risk exposure, we have risk on sentiment. You can see that the Russell, the small caps, which are hurt the most by inflation and benefit the most by disinflation, they're ripping. They've ripped through the 1920 and are pushing through into 1960 here. They're ripping higher. The Nasdaq, of course, which is also very, very capital sensitive, and so on. Europe, same thing. So we're seeing clear risk on commodities getting money flow, silver pushing higher, copper pushing higher, and then the treasuries are also getting money flow, as well as yields are pushing lower in response for lower CPI. So very interesting stuff. Bitcoin pushing 31,000. And then, I can go through the calendar, but I won't, just to understand that there's some things in play. The other thing that's in play is that an appeals judge, a federal appeals judge yesterday, has actually reversed or ruled on the merger between Microsoft and Activision, and this is really, really big. It's a $69 to $70 billion merger that the FTC has stood in front of and has tried to prevent, and the judge basically rebuked and almost scolded the FTC's position and made it so that Microsoft Activision can move forward with that merger. Activision is a very, very big, one of the largest video game suppliers in the world. Microsoft is Microsoft, just a gigantic company. And what this does is it actually stimulates, that ruling might stimulate the M&A market going into the rest of the year, because the M&A market has been quiet as the FTC has come down pretty hard on those companies, the bigger companies that are trying to merge. So this is also important news, probably isn't hitting your headlines or your evening news or whatever, but it's important for trading and for equities if you're trading indices. The S&P this morning is in a multi-distribution profile. We saw throughout the morning that there was pretty active price discovery across the entire range. No consensus before CPI and no consensus now after CPI. The volume's been pretty good, 256,000. The inventory is quite long, 86% long. So we're going to be paying attention to the inventory balancing on the open. We're opening in a gap, and we have 40 points of range. We had about 16 points of range before the CPI, so we've more than doubled that range on the CPI. And most importantly, we've shifted the point of control overnight to above 5,400. 44, 98, and 96 have been the gatekeepers, with a ton of supply every time we've come up here, and we had a bit of a double top. We'll look at that in a minute. So that covers this sheet here. And so we're coming in with 40 points in range. The expectation is that we'd have pretty good movement. Here's the TPO chart, just the general overview. Here's where we're trading right now, right up here. You can see the prior high, 98, 96, or 93. 98, 93, 96. I think that may have been the overnight. I'm not sure. And then yesterday finished pretty strong. Nice little push from 65. If you recall, we talked about the 65 quite a bit yesterday and the day before. On Monday, the 65 was a breakout. We took out the double TPO high at 76 from last Friday, I think. Was it last Friday? I think it was last Friday. Yeah. We took out the double TPO high, and we have pushed through what happened. What happened on the week before on Friday, which is the high of the year. We've pushed that through, and we've taken that all the way up into 45, 10, 75 in the overnight session, and we're opening up there. So we're opening in a relatively large gap to the prior session, and we're opening away from where we've traded in the last year. We're opening in new all-year highs, which creates a kind of a precarious condition for us here to contend with, in that we have to look back quite a bit. We have to look back quite a bit and pull in data from way back. So you can see that, we are in this area. We've been trading in this area right here from 4,400 or 43.90 all the way up into 45.20-ish. 20 to 25 gives us a low volume node up in this area, and we've cleared this whole region. If we zoom in a little bit, we can see, and I think I talked about this yesterday, you could see that there was a rejection on Friday of these higher prices from the 70s down. Then on Monday, we came in, we tested below the 44.25, we rejected that. So we ended up basically with 2 days where the body of the candle is overlapping, and we had wicks on top and on the bottom. Major disagreement between Friday and Monday, and that resolved itself yesterday once we were able to get above the 44.51, which we talked about quite a bit yesterday. Once we were able to get above the 44.51, that was the line in the sand, or the over-under line for this region. We clear the monthly VWAP, and then we are now really gunning for the high, as I discussed yesterday. I talked about this yesterday, that look, if we push the 44.51, we are very likely to quickly get to 65, get to that double TPO high at 76, and potentially push to 80-ish. And that's basically what it accomplished yesterday. So let's look at that shorter term. A lot of movement. So shorter term, this is what yesterday looked like. Open, squeeze right away. So it opened right above that 44.51. It attempted to hold from above. You could see that the initial opening swing was retested and held. It held right against. Let me thin that line a little bit so that it's not so crude. So you can see this is the opening swing low right here, opening swing high right up here, opening swing low, you have your impulse down. We push through the 44.51 after testing up into the 58.75, and then we pull back to where? We pull back to the opening swing low, which is in confluence with the mid and so on, and so we end up playing out the impulse consolidation continuation trade. And then once it got above this line, 44.51 right here, you can see retest. Once it got above this line, it was really a squeeze to the upside. It looked to me, because we had our trade talk at Convergent Trading yesterday from 12 to 1 o'clock my time, it looked to me like it was likely to just rest for the rest of the session. But what it did is it broke out to the upside, held the IB on a retest, and then off to the races it went into the close. It really pushed hard into the close, and that whole push occurred from 44.65 up. 44.65 up. And then once we got up there, we had the pullback into the close, the margin rebalance and so on. You almost always have a reversal right after the cash close when the futures are still open, and we have the small pullback. But since then, so we have settlement right in here, and then you have this sideways, and then immediately you could see the market kind of opens and it holds this VWAP and holds above the prior settlement of 73.50 throughout the overnight session. At 7:30, right in here, we got the release, and the release, the SOC, and you want to record this number, the SOC for CPI for future reference. If we come back here, and we will most likely come back here, is 44.8350. That's where this number came out and caused this run up. It collided with 44.89, pulled back to 44.89 on the dot. You can see that collision, the blue dot here, pulls back to 44.89 after pushing the 98 into the 4,500, and then it squeezes the 4,500, and you get your usual 4,500 back and forth, as that is a major strike. And so it's programs will start to hedge positions for that major strike, and so you get this back and forth, and then once it cleared it, it pulled back right below it, and now we're continuing higher. So we're opening quite bullish. We have shifted the point of control to the upper end of the range at 45.0450 or so. Let me see what that point of control is precisely. 45.04 even. We've shifted it, but we have pretty good separation from the full session VWAP mid to the current pricing. So this is a market that's really out of balance, and so we expect the open to be quite expressive, meaning we expect pretty good participation on the open, and we expect either a pretty strong response into the gap or a gap and go situation, which is what we would normally see. Now remember, this is highs for the year, not all-time highs. These are highs for the year. We're not very far from all-time highs on a continuous back-adjusted contract basis. We turn down the news here. We're not that far off, but still we've got inventory just really long right now. We've got a lot of separation to references. Don't be surprised if it pulls back at least a gap mid. The gap mid at this point is going to be what? The 78.50 to the open, call it 45.1250 or so, 45.1150. The average price in between that becomes an immediate line in the sand. Let me clear my throat. Becomes an immediate line in the sand. Let's do the math here. 45.1250. Where are we? 45.1250 to yesterday's high, which was 44.7850. So the gap mid is going to be 44.9550. 44.9550. What do we have in that area? The 95.50 is most likely going to be the gap mid, right? So this is the gap mid, and then we have VWAP resting here at 44.94, and we have the mid resting at 44.93. We have confluence here of these three pieces plus a stock zone right underneath the century figure. So to me, there's a pretty decent chance that if we do push down here, this will act as the key line in the sand in terms of, the VWAP will get lifted quite quickly when we open, when that volume comes in. So it'll probably creep up into 44.98, 44.96, something like that. But as long as it holds that mid, gap rules apply, and I'm looking to trade from the long side and looking for the overnight stat to be taken out at 45.15. Did I confuse you with all of that? I know I'm juggling a lot of numbers here and I'm speaking fast, but we have a situation where the prior session's auction is well beneath us. We have a scene of the crime at 44.8350, which is still higher than yesterday's high of 78.50 by 5 points. Then we have the market separating quite a bit from our day generated levels, the full session VWAP, full session mid. We're opening in a gap, the gap to prior high, the gap zone mid is at 44.9550, and in that area we have these levels that are all piled up together along with the century figure at 4,500. So you have this really big sandwich of stuff happening between 4,500 and 44.95, and that's going to be the early line in the sand, and that's where the market actually has weak structures. You can see here, look at this. Until you get to 4,500, it has pretty weak structure all the way down to the SOC. So anything between 4,500 and 44.83 is quite weak, and it's very likely to run through there if it clears. So I don't know which way this is likely to go, but as long as it holds the gap mid, I'm gunning for that overnight high at 45.15, and then from there we have 45.24 or 25 is the next key test area. Okay, so the market's clearly risk on and it's pushing in a single direction. Who am I to come along and trade against it? That's the point that I'm making. Okay, so I'm going to leave you with that. I know I covered a lot there. By the way, the relative delta this morning, we have some really extraordinary. Oh, this has changed. Something's up here. This was not like this. Yeah. Yeah, the relative delta, you see that very large lot size? We normally don't see that. The 3,600 and very large lots in the overnight session. And yes, a lot of it was awoken by the CPI was already positive, but there's quite a bit of lifting from very large lots. These are laggards. These seem like laggards to me. This seemed like laggards to me into the auction. So we have very large lots, small lots dominating, large lots almost flat. To me, the flow is really to the buy side again. As long as it holds this area here, I'm really looking for opportunities to define a long with clear risk. As soon as it gets below that 93 area, 95 area, things change. But we are opening in a gap, and it's very likely to be a gap, pullback, and go situation, gunning for the overnight high more so than the overnight low. These are how the probabilities, historical probabilities play. And in that case, we're gunning for 45.24 once we take the overnight high. Remember, the overnight high stats, 98% historical probability that the 45.15 or the 45.70 get touched today. And it's much more likely to touch the 45.15 than the 44.70. So why would I trade against that? Be patient at the open. It's likely to be quite quick to set up. And then just mind your risk. There's going to be movement, and it's likely to be a little bit thinner today. Don't overcommit. I'll let you go. I'm way over my time. Good luck, and don't forget to sign up for tomorrow's Ask Me Anything. That starts at 1 o'clock Eastern tomorrow. And I'm happy to answer any questions you have. It's an AMA session. Just if you want to prioritize your question, please pre-submit it, and you can do that by pointing your browser to the URL of go to ct.pro/my-question, all lowercase. Go to ct.pro/my-question. Submit your question through Twitter, or go to the show itself by going to that tweet and finding the link for the show and typing your question into the YouTube live chat, and we'll address it there. Good luck.
One minute to the U.S. market.